Hi there, Serial Trader here. I'm going to have a look at the major US indices, and as usual, starting off with the wave analysis on the SPX chart here. But also, just a quick heads up, after this video, I will be uploading a video with, I think it's about 3 charts that I think are worth consideration. Big names with nice setups. Apple, Amazon, and Microsoft. So if you're interested in that, certainly check that out after this video. But okay, back to this. Hourly chart here, SPX. Okay, so we still got our initial impulse wave off the bottom, that pre-election bottom there. Now I think I'll settle on this being ABC, truncated C for the wave 2. Now I think this third wave is in development here. And normally you'd want to see a third wave nice and sharp compared to that first wave. But I think given the kind of shock factor, the exogenous event that was associated with this impulse wave. I wouldn't say it was causal, but it was certainly coincidental with it. I think you had that fast movement that's not really realistic to continue under normal market conditions. And this can happen on indices where you're still in an impulse wave, it's still bullish, but it just doesn't move as quickly. It just takes more time, and that's really why you're seeing this shallower slope here in potentially wave 3 compared to wave 1. So take that for what you will. Now to support that we're still in this wave 3 development and that we haven't made a big top and we're about to tank hard, let's just do a little dissection of the current price action. So I think we got from this wave 2 here, we got another 1, 2. This is probably the 3 of the 3, 4, looking for 5 of 3 to higher highs here soon. And if we break down maybe some Fibonacci relationships, so we got the initial one up here, and wave 2 did almost a 78.6% retracement, so a nice deep wave 2. That's typical for a wave 2 to see a deep wave 2. And if we go from here and do a pull here, so let's see what we retraced as far as wave 4 compared to wave 3, and I believe we're right in between the 38.2% and 50% retracement, which is very, very typical. That's like the ideal zone for a wave 4 retracement. And we do not have, just hang on there, we do not have any wave 4-1 overlap. And here's where we would get that overlap, right? And you can see we're still cleanly above that level. So no 4-1 overlap. We have the typical fib retracements for wave 2 and a typical fib retracement for wave 4. And let me also just do a relationship between 1 and 3. So here's our length of wave 1. And then we'll do some wave 3-1 relationships. So we got past the 1.382, 3 versus 1. Do we get closer to the 1.618? Let's have a look. Pretty close. So we got close to that 1.618 extension of wave 1. So that's very typical for wave 3. So far, the weight of the evidence here as far as the relationships between the waves and the fib levels, this is all suggestive that we're still in a developing impulse wave to the upside and likely a wave 3 by my estimation. But it's pretty simple here. So we basically can't take out the lows here at 36.33 or something else is going on. But for now, I think even short term, higher seems like the higher probability scenario. And we'll get into the thinkorswim charts there, and I'll point out some other things that kind of support that as well. But unless something changes here and we take out the lows of 36.33, bias should remain to the upside. If those lows get taken out, it may not mean it's going to absolutely tank or anything, but it just means something else is going on, and it would require some reassessment. But for now, just keep it simple. I like that we're still in a developing uptrend here, and there's certainly no reason to abandon that given the current information. Okay, and just as far as I'm concerned, as far as my position is concerned, I'm still long futures from significantly lower levels. I've been in and out of some shorter term plays with the futures, but my core long futures on the S&P mini futures, the March contracts, still long those, and I've now adjusted my stop on those to just below the lows we had this week. And they're a little bit different on the March futures, but not a whole lot. Maybe 10 points or so difference, nominally speaking. Okay, so I think that's all I want to point out here for this. Now we can just do some targets, shorter term. So if wave 4 is in place here at 36.33, wave 4 of 3 that is, we can do our reverse fib extension to the upside. What do we got going on here? Let's get these placeholders out of the way. The 1.32, I guess, to 37.42.56. And the 2 would get us to 37.91.38, so almost 3,800. So those are reasonable targets if we got our low in place for the next wave up, possibly wave 5 of 3, right? Okay, so maybe just keep that in mind heading into next week and or next couple weeks maybe. Okay, that's all I want to go through on this. Now I'll go over to the thinkorswim charts. Now another thing to support that we may have already put a decent low in place here. So here's the daily chart. Looks like we have a bullish hammer candlestick. And we got a bounce almost perfectly off the 20-day simple moving average here on SPX. So that's nice to see. In a bullish uptrending market, the 20-period simple moving average often provides a nice support level. So that's looking good. Also, the candlestick is a bullish hammer. So that's suggestive of further upside potentially. And overall, I mean, the trend is up, right? To me, the previous, just conventional swing low here would be 35.94, so just over 30 or just under 3,600, and that's still untested or untouched. So looking good. To me, yeah, you have a little bit of a bearish engulfing candlestick here on Wednesday and a couple down days, but really nothing substantial. So to me, you got to give the benefit here to the upside, especially getting that nice reaction off the 20. Now, importantly, like I said, I put my stop just below Friday's low there because if that fails, basically you don't want to try it a second time. If it bounces off a support level, comes back down and takes it out, that's a little more bearish. But for now, it's intact. Now, weekly candle on SPX. Nothing really to get from that. Just kind of a down week within a still developing uptrend for now. Didn't take out the prior week's low or anything. So still continuing a pattern of basically a higher low every single week for multiple weeks. So that's still bullish there on the weeklies or on the weekly chart. Okay, we'll go with the Dow Jones Industrial Average. Very similar picture. Went down to the 20-day simple moving average. Nice bounce, bullish hammer. Closed above the T-line there. So looking good on the Dow for further upside. Again, long, basically as long as that support level from Friday holds, at least on a short-term basis. Okay, let me see. SPX. No, SPX didn't close above the T-line, but that's okay. It's not a must-have. Okay, so NASDAQ Composite. Now the NASDAQ, bearish engulfing on Wednesday, but really not much follow-through here. I mean, if you look at this, didn't even get down to that 20-day simple moving average, and looks like we have a bullish hammer there on Friday, closed right around that T-line. So you really got to give the upside the benefit of the doubt until it actually forces you not to, and right now it's not forcing that. Okay, weekly candle here on the NASDAQ. Just kind of an indecisive week. A little bit of a doji. Again, higher lows every week for many weeks in a row here. Yeah, just got to give the benefit of the doubt to the upside at this point until you're forced not to. Okay, now the Dow. I don't know if I did a weekly candle on the Dow. Just have a look. I don't think it'll show much difference as opposed to the other two indices, and no, it doesn't. So yeah, a down week, but didn't take out any significant levels. So a down week was within a weekly uptrend. Not much else to say about that. Okay, now we'll go over to the VIX. Now the VIX is certainly in a downtrend. A little bit of a pop up here, a little bit of a spike up, but you can see a fairly strong rejection even intraday there on Friday. So I think the VIX is going to remain sideways to down here, which is bullish for the markets. And on the VIX VVIX tool, just hang on there. VIX VVIX tool, we did get a bit of a sell signal there. So a little bit of a divergence between VIX and VVIX. So here we made a lower low on VVIX. Here we made a higher low on VIX. And then, of course, VVIX got above the red moving average. And then SPX got below the blue moving average. So a little bit of a minor sell signal. But again, we're not getting a whole lot of follow through, and it looks like we're coming back up already. So technically on a sell signal here on this tool, but I think it'll be short-lived. We'll see. What would change my mind is if we take out Friday's low. That would certainly make me reassess at least the immediately bullish outlook. But other than that, I see no reason to abandon that outlook. Okay, so that's probably good. I'll do up that video on Apple, Amazon, and Microsoft here shortly, because I think there's some quality setups, and those are certainly quality names to play that have quality setups. And I think they're just a little bit more interesting, maybe a little more timely than trying to chase the indices higher, even though, you know, it still looks bullish. But looks like we got a little more potential in those names that have built up here over the last number of weeks. All right, Serial Trader signing off.